The relationships of cause and effect are largely constant across time, shaped by the process of evolution. Evolution, in this context, is the gradual transformation over time, and within this framework are recurring cycles. These cycles become evident, for example, when institutions like the Federal Reserve face critical decisions, such as choosing between allowing defaults or printing more money. Historical patterns reveal how such dilemmas and their outcomes repeat, highlighting consistent cause and effect relationships. However, the world is always in flux, leading to shifts in the global order. A poignant example is the post-1945 era, which marked the commencement of a new world order. Throughout history, power struggles have been a constant, with no global court to adjudicate disputes. Consequently, wars determine power dynamics, with victors establishing new rules. In 1945, the United States emerged dominant, possessing 80% of the world's gold, the currency of the time, half of the global GDP, and unparalleled military might. This led to the U.S. shaping the world order, evident in the location of the United Nations in New York, the International Monetary Fund (IMF), and the World Bank in Washington, D.C., and the adoption of the US dollar as the global reserve currency. Currently, we are witnessing three significant shifts that are unique to our era. The first is the unprecedented scale of debt and money creation, which directly impacts the value of money. The dilemma for central banks is whether to repay debts with solid, unaltered currency or with inflated, devalued money. Choosing solid currency often leads to a debt crisis. Therefore, the common response is to print more money, which in turn leads to inflation. The second shift is the rise in internal conflicts, often coinciding with significant gaps in wealth and values coupled with financial instability. This environment fosters populism on both the left and right political spectrums. Such times of economic and social strain lead to a polarization in society, with different groups advocating for their own interests and ideologies. Individuals who feel marginalized often seek leaders who will aggressively advocate for their interests, rather than those who aim for middle ground solutions. For these individuals, compromise is seen as a failure to fully represent their needs. Consequently, this leads to the rise of populist leaders on both the left and the right, with increasingly entrenched positions and a growing reluctance to compromise. This dynamic raises the possibility that, in a critical election like the one in 2024, the losing side may not accept the outcome. Such a scenario, while unprecedented in our lifetime, has occurred in history. This pattern illustrates how societal divisions deepen and positions become more rigid. The third significant shift in our era is the emergence of a new global power challenging the existing dominant power. For example, post-1945, the United States was the unrivaled global power. Now, its dominance is challenged by the rise of China, creating a level of competition equivalent to that of the US and its allies. This rivalry manifests in various forms of conflict, typically starting with trade and technology wars, escalating to wars of geopolitical influence, then to economic and capital warfare, as seen in the use of sanctions, and potentially culminating in military conflict. This progression has been a recurring theme throughout history. When analyzing the economy, it's crucial to avoid a narrow focus on past trends, such as low inflation rates, and to understand the different types of inflation. There's demand pull inflation, where demand outstrips supply capacity, leading to higher prices as unemployment rates drop and production limits are reached. Then there's monetary inflation, which occurs when the creation of money and credit outpaces the production of goods and services, leading to price increases. Currently, we are witnessing a spiral of this nature, with bond sales exacerbating the imbalance. Governments sell bonds to finance deficits, and bondholders sell bonds due to their diminishing real returns. This situation creates a supply-demand imbalance that either necessitates higher interest rates to reduce demand or compels central banks to print more money, further fueling the cycle. Historically, central banks tend to resort to printing more money when faced with significant debt, leading to monetary inflation. This type of inflation reminiscent of the 1970s or the hyperinflation in Germany's Weimar Republic in the early 1920s, is often underappreciated. When a nation accumulates substantial debt, it faces a dilemma: hard money or use depreciated currency. This decision is crucial as one person's debt is another's asset, and the larger the debt, the more significant the problem. This scenario is where stagflation emerges: a stagnant, low-growth economy coupled with high inflation, shaped by the central bank's efforts to strike a balance. The ideal for a central bank is to maintain moderate inflation and avoid excessive economic slowdown. However, managing this balance becomes a complex task when there's a high level of debt because the interplay between debt and assets becomes intricate. Stagflation often arises in conditions where there is excessive government spending without sufficient backing, as seen in the late 1960s with the Vietnam War and social programs in the United States. This overspending, compared to the available reserves, which were in gold at the time, led to the devaluation of 1971 and subsequent stagflation. Addressing inflation typically involves implementing tighter monetary policies, effectively reducing the amount of money and credit available to the public. This process, aimed at curbing spending, involves the central bank, like the Federal Reserve, selling off a portion of its debt holdings. For example, the Federal Reserve might sell $1 trillion of its debt assets, a move intended to absorb excess money from the economy, thereby tackling inflation. This delicate balance between controlling inflation and maintaining economic growth is central to monetary policy decisions. Subsequently, central banks may decide to increase interest rates, creating a tight financial environment that curbs demand. However, this approach has a significant downside, particularly when inflation is already high and reducing people's purchasing power. By further diminishing buying power, central banks aim to curb inflation, but this often leads to stagflation. To understand inflation simply, consider it as the ratio of the quantity of money and credit available to the quantity of goods and services being sold. Inflation occurs when there's a disproportionate increase in money and credit compared to the production of goods and services. The degree of inflation correlates with the extent of this imbalance. Recently, a massive surge in money and credit creation, coupled with production bottlenecks and disruptions due to COVID-19 and geopolitical issues, has fueled inflation. Although some inflationary effects are due to these supply chain disruptions, the primary driver has been the significant increase in money and credit. Observing the global balance of power, the United States no longer holds its former dominance in military and economic spheres. China has risen to a comparable status, becoming a more significant trading partner with other countries than the US. This shift impacts the dynamics of currency power. The ability to print a globally accepted currency is a unique advantage, as it leads other nations to buy and hold a country's bonds and debt. However, two key factors are currently undermining this advantage: the widespread practice of printing and devaluing money, which is not exclusive to the US, and the strategic use of the dollar for sanctions, a form of its weaponization. In this context, America is experiencing a relative decline in various aspects, including education, military capability, and economic strength. Internally, the country's cohesion and collective behavior are also changing. During such phases in history, it's common for all currencies to depreciate simultaneously, similar to what happened in the 1930s when currencies depreciated against gold and tangible assets like real estate. We are entering a new era where the pressing question revolves around the future of currency. It may not be limited to traditional government-issued currencies. Alternatives like cryptocurrencies, gold, or other forms are emerging contenders. While currencies like the dollar will continue to serve as mediums of exchange, their role as stores of wealth is under scrutiny. Major currencies currently lack real returns, prompting a shift of investments into different assets and a noticeable sell-off in the bond market. Resource allocation is increasingly influenced by ideological and political factors rather than purely economic ones. Nations like China and the United States are focusing on self-sufficiency, driven by concerns over potential cutoffs in international trade. This trend towards self-sufficiency is mirrored globally, as countries prioritize their own stability in a volatile world. Capitalism, while effective in resource allocation and wealth generation, also creates significant wealth disparities and accumulates large debts. These factors can lead to feelings of disenfranchisement among people, as historically seen in Europe, where major democracies shifted towards autocracies amid conflicts between the left and right. Historical episodes, from the French Revolution to more contemporary examples, highlight the dangers of extreme polarization and the diminishing space for moderates. The current political climate is characterized by increasing extremism within the two dominant parties in the US. Roughly 30% of the population leans towards the extreme right, and about 15% towards the extreme left. This leaves a majority of Americans in the middle, yet without a political party that truly represents this centrist perspective. The absence of a strong middle ground in politics is a significant concern. Investing in education and infrastructure has historically proven to be the most beneficial for a nation's growth and stability. These areas offer the highest returns on investment, underscoring their critical importance in shaping a country's future. A more inclusive prosperity is the ideal outcome, but achieving it requires overcoming certain obstacles, including constitutional limitations. A central platform that promotes moderation is essential. The introduction of a third political party, while not necessarily practical, could offer a balanced viewpoint, drawing individuals away from extremist positions. Without such a platform, history suggests a trend towards increasing extremism, potentially leading to conflict. The gravest concern is the prospect of a kind of civil war, not necessarily in a traditional sense, but in a breakdown of the rule of law and constitutional order. This could manifest in various ways, such as election outcomes not being accepted, Supreme Court rulings being disregarded by states, or populations relocating based on state values. The core issue is the erosion of the rule of law and respect for collective governance. The possibility of escalating to violence is not to be taken lightly, especially considering the widespread ownership of firearms in the United States. While not predicting outright armed conflict, it's crucial to recognize the potential risks and work towards de-escalation. A crucial aspect is the adherence to the rule of law and constitutional principles. If these are disregarded, it could lead to a power-based system transcending democratic norms. The probability of such a breakdown is concerning, with estimates of around a 40% chance. The current media landscape exacerbates this division, with unbiased reporting becoming increasingly rare. This polarization is evident in various aspects of society, from corporate decisions to state-level policies. The objective should be to serve the majority's interests, but the focus seems to be narrowing. By various measures, economic prosperity has been uneven since 1980. For instance, per capita income for the bottom 60% of the population has stagnated. Surveys and studies reflect this disparity, indicating systemic failures. Continuous improvement and adaptation of the system are necessary to address these issues effectively. As a mechanic who focuses on the cause and effect relationship, I see a fundamental issue in our society. The reinvestment of gains often fails to trickle down to create essential foundations for a prosperous community. The basics are straightforward: nurturing parents, a robust public education system, and equal opportunities. These elements have historically been the bedrock of societal prosperity. When people have access to these, society as a whole tends to thrive, drawing talent from diverse backgrounds. However, we're caught in a downward spiral, particularly evident in certain communities. Many children grow up without supportive parents or access to quality education and equal opportunities. This leads to a growing segment of the population feeling disenfranchised. This sense of disenfranchisement played a significant role in events like the election of Donald Trump, who appealed to those who felt neglected and sought a leader to advocate for them. The profit system alone is insufficient. The history of societal conflicts and struggles indicates the dangers of ignoring such issues. We're at a pivotal moment where our collective choices, especially in how we treat one another, will shape our future. This applies not only within America, but also in our interactions globally, such as between Americans and Chinese, and extends to our broader human interactions. Today, the world possesses more resources and wealth than ever before, along with an incredible capacity for innovation and progress. However, the critical question is whether we can manage these resources as a united society. The challenge is not just in the abundance of resources, but in ensuring their equitable distribution and in fostering a sense of unity and collective well-being.